All right, hey guys, Sam here, back with you, middle of the day, September 28th. A couple of updates on two majors we haven't looked at recently that seem to be setting up for some nice potential trades here. So this is Monero, trading on the 4 hour, where I'm on Kraken here. And I thought I would show this to you because we've got, kind of a nice setup here for a potential two-way. Remember, we're trying to find twos and fours. And this seems to be setting up in what could be a nice-looking trade. So this is, so here we've got the entire move up, and then we've got this labeled as a three-wave correction. You can see I'm just pulling from the low to the high. We go right to that little pocket between the 618 and the 65. So I'm going to take this off just to declutter the chart. So there's our nice ABC. Now, it gets a little unclear here. I think a lot of technicians were looking for one more push down to complete a 5, but we don't get it, right? So we've got what we have here now is we've got a higher low, right? So we've got the potential, since we like the structure here and the fact that the 618 or the 65 defended and we had a reaction off of that, we've come back down, put in a higher low. So potentially we've got a reasonable starting point for a new count and a new structure. So let me just declutter some of this. So I'm going to take that off. So I'm going to break this open here so you can see it a little bit better. So this is the question mark. This one wave is the question mark. It's not ideal structure. So, if you go down to a smaller time frame, you could make a case that you have some sort of a truncated fifth. Sometimes you just got to pull fibs, and hopefully, the wave structure unfolds in the relationship between internal and external retracements. So we get this, and it's technical. So if we look at the pull from the low to that high, same thing, right to the 618, 65 little pocket that goes through by $1 or $2. But then we get the reaction, and the reaction unfolds as a leading diagonal, which would imply that it's either a one wave or an A wave. So yes, there's the possibility that this is an A, we're going down for a B, then there's a C. But either way, if we're putting in a B or a 2, the next leg up, if this is going to hold, the structure holds, should be impulsive. And we can put some targets on it up here that create good risk reward. So if I break this down even further, let me go down to a 1 hour. Pop that up a little bit. You can start to see, you can see the one, my mouse acting a little funny. See the 1, 2, big 3, 4, and then we actually even carve out a 5 in that final push up here. And it happens to be coincidentally right to the 618 of if we project from low to high from the what we've got labeled as the 2 low, we go right to the 618. 62% of this move projected from this low. So again, a clue that it's moving technically. That sets up a nice little ABC correction, which may not be done yet, but we've got this channel now that gives us potential structure support. And if we work from this low, this 2 low, to this wave 1 high, let me pull this off and redraw it so we can get a clean pull on it. So you can see what I'm doing. So I'm just going from this low to this high, and there's the 50, which happens to be nicely aligned with this upsloping. It's a trend line, but it just happens to be part of a channel as well. So nice little trade setting up if we get there, right at the 50. Now, if we're going to go up on that, well, this is our first target here. This would be the negative 23 from this 50. So there's a first target. We've got the negative 23 from this target here. So we got a couple of targets. If we go impulsive, we know that the likely target for the third wave, if we've got the leading diagonal here, we're coming in for a correction. The most likely target for that would be 162% of it, between 62 and 175. So let's say we get the 2. So that puts our target way up here. So this starts to look more interesting. Here's the negative 100% from this low, right? There's the 1618 to the 175. There's some nice upside there. Very nice upside. We're coming, if we get the 50, we're coming down into the mid 90s, and that's a move up to 127, 128. So nice risk reward there. So as I like to point out to you guys, if we can catch this, first target, where would our stop be? We'd be just under the 65, right? Because we know it's wicked that a couple of times. See it there? So we want to give that a little room. First target, 4 to 1. Second target, 5.5 to 1. The big upside target, almost 9 to 1. Where's the 618? There it is, right there. 9 to 1. So you've got that's a nice looking trade because you've got places to take some profit along the way. So, or potentially, if we start to unfold here, if we go into an impulsive structure here, you can expect a one wave, a retrace, so possibly a place to add if we get off to a good start here. So it's either take some profit here, wait for the retracement, look to go again, or you're following with a stop. So at the very least, if we get a pop here, as I always suggest, take your stop to break even, right? If you can avoid risk, you always want to look to do that, right? If we come down to the 50 and get a reaction that we would expect here, and the market moves away from it, move the stop up. Move the stop up. Right? Why maintain that level of risk? Your assumption is that the low is in off the 50 and the channel, the trend line. So why maintain the risk in the market? Now look what happens to your risk if we go up to the upside here. Now you're at 34 to 1. Right? No reason to keep risk in the market, right? As long as you're in the market, you're at risk. You always want to be looking to reduce it. So even there, that's 10 to 1. Almost 14.5 to 1, up to 23 to 1, and that's if we allow for a little pullback here. But if you get off, take the stop to break even. Then it's just then it's just a free ride. It's just a free ride. All the risk is when you're first entering the market. Usually, right? There's no absolutes, but usually, and what we'd be looking for, take note here just to validate the trade. You've got your wave one sitting right here. You've got a lot of things lining up there. Now, we've already hit the 38, but we'd be expecting the 50. And with that structure there, the wave one here of if we're right about this being a leading diagonal, then that's your exit point, which happens to be right at the channel, right at the 50. So you could enter this with a really tight stop. Really tight stop if you wanted to. And if it keeps going, if it goes deeper and we go to the 618, then you reload, stop under the 65. So nice trade setting up there. If I look down here, maybe that's certainly we've retraced enough to where a 2 is a possibility. Ideally we'd see the RSI a little bit lower, but if that's going to go down below 30, then likely this is going deeper and we're going to the 65. Right, so you can always look to the oscillators to help you with timing, and it just gives more energy. Right, that's how I always think of it. Is the energy potential there if we're going to go lower to get all the way up to the top of it? Right, you see what happened here on this too. Right, we get below 20 here, so we have all that energy potential, to get all the way up to where we get, relative to the RSI, we get overbought. Right, and then we correct that. New energy wave is created. New energy wave, but it doesn't always get down there, right? So we had a couple of times we came to the mid bounced and we kept going. So you don't need to be absolute about that, but this structure combined with this leading diagonal with a 50 with a trend line, that you take that every time. Okay, let's just to finish up here. I want to look at Ripple as well because that was kind of interesting. So here's Ripple on the larger time frame. So this is the 240 on Bittrex. Also, much like all of crypto, we've had this unusual structure here where we looked corrective. It looked like we had one more push down, and we just have not gotten it. So, how to label it, I don't know that that's as important as to what this ends up being, and it may take much more data before we can really quantify this with some sort of absolute count. But right now we can definitely carve out an ABC. And we've had some reaction here. We expected new lows. We don't get it. Now we've gone impulsive. So if we just do the most basics of technical analysis on this, and I'm just drawing from the high to the low. Right? Here's our 50. Here's the 618 to the 65, which happens to line up interestingly with the median line. Now we got to be aware of this one as well. Right, we got to be aware of that. So we could hit a little reaction there, but there's some upside. We've gotten through the 50, bullish indication. We've gotten through that. We're coming. Now here's the 200 here. So if we allow for the potential for the all the way halfway back and the 618 to be a reasonable target because it lines up so nicely with the median line. So if we're looking to be a buyer here, well, we've got a nice little pocket also here that we can draw from what is looking like the swing low here. So let me take that down to a 1 hour. Get this off for us. Okay, blow it up a little bit. Now we got to realign when we change time frames. It's just the reality of most trading packages will make you do that because of the change in time. Okay, so if this is a good swing for us to work from, I got to do the same thing over here. Let's put it on that high. Okay, so we've come down. Actually, we've wicked it, right? So if that's definitely a contender for some support, but we'd also want to have one here. If this is our wave 1, which is below the 65, right? You can see see how this works. It's so consistent. That's resistance becomes the support right before we launch. So is this a 1, 2, 3, 4? Maybe I've got it labeled over here, so you can see it a little bit better. So potentially, here's a 1, 2, 3 big impulsive move. We've come down. This was the pivot we were just looking at. So that's a contender for support, which happens to line up right with the 50. So this is a possible trade right there. You'd expect that. Actually, you'd want to be a little bit. So it could be we've missed it. Could be you got to wait for a little pullback, see if you can get the 38. Could be we get one more pull down. But this is definitely one to be watching. It could be we missed it. Could be it's already come and gone. But my guess would be not. And my guess would be they're going to want to challenge that swing. They're going to want to challenge the 50. So if that's the 4, we're not assuming that that's a 1. We're assuming that this is our 1. So the one we really want to be conscious of is way down here. So we've got a lot of room. So my guess is there's a trade here at the 50 with the expectation that this is potentially a support area here. But so we put a risk reward on it. Let's say we get the 50. There's our first target. Other side of the 65. 4.5 to 1. If we get up to our upper target here, we got another target up here, which would be right at the median line. So 6.8 to 1, right? Very reasonable, very reasonable. Now, it's not the cleanest ABC, but it's there. Again, possibly it's already gone. Possibly. My guess is we get one more push down. So certainly one to alarm it on this here. If we touch that, I'd want to be notified. If we get the 50, I want to be in the trade. Here's my 200. Here's my stop. Again, not necessarily a home run ball, but that's a thoughtful, well set up, structured trade. On the median, I'd put the outside edges on. I'd put the 1.5 and the 2. Maybe the 1.5 catches it, but a nice clean. There's your impulse. 1, 2, 3, 4, 5. We're good there. You can see it down here. That's likely a third wave. we've come down far enough to qualify for a fourth wave. Hopefully there's one more little pullback. We can catch it, and then there's a run up to first target, second target. All right, just a few more things to keep an eye on, over the next 24 hours. Okay, guys, that's it for now.